This is the current federal tax developments for the week of April the 2nd, 2018, brought to you by Kaplan Professional Education and your state society of CPAs. This week, we're going to look at some of the interesting developments, and not a whole lot going on this week, but we'll talk about it a little bit. I'm sure you're all busy as I am, so the fact there's not a whole lot going on is probably not a bad thing. I'm Ed Zollers. I'm giving you this from Phoenix, where it's now going to be above 90 today as I tape this on Saturday. So we're starting to get to the warm side of the equation. So, hey, in Phoenix, that just means 90 means that we still got like 20, we still got potentially 30 degrees to go. So we're moving. But we'll talk this week about some interesting issues. We'll talk about a little lighter story that we'll start with. Then we'll talk about some of the IRS statistics they gave us this year that tell us about how things have been going. We'll discuss the Bitcoin issue, the virtual currency. The IRS issued a notice, and it's probably time to go back and review the original IRS notice on this topic that came out in 2014, back when many of you may not have any clue what virtual currency and Bitcoin were. So we'll talk about that this year. And finally, we'll talk about the IRS's recommendations for taxpayers to have a payroll checkup. But let's start out on the lighter side. Turns out not all accountants this time of year are actually doing 1040s. And we're going to give you this story, and I picked just one link on a website because everybody covered this. A 36-year-old accountant called in as emergency NHL goalie, and he crushed it. That story came from the NPR website, but you can find it on virtually any news site had the story of this particular goaltender. And the issue involves, they're accountants. Accountants do more than just accounting. And in this case, we're going to talk about Chicago accountant Scott Foster. Scott is a 36-year-old accountant in Chicago. And in college, he played hockey for a college hockey team. And he continues to play hockey in an amateur league in Chicago, high-end amateur league, but he continues to play to this day. One of the interesting asides that you have in hockey, if you're not aware of this fact, is that in the NHL, they often have to sign up. They have available this thing called an emergency goalie, the emergency backup, because they have two on the roster. And if one of them happens, if in fact we happen to have both goaltenders become unavailable, they need another one. So they often have these people who are emergency goaltenders. Scott's one of these people. He was asked to come to the arena after one of their goaltenders injured himself in pregame activities. And therefore, they were down to just one goaltender for the evening. Well, that particular goaltender, it turns out, ended up having problems and had to leave the game in the third period with just under 15 minutes left to go. So the backup goaltender's out. Scott now was told to come down. Now, Scott has done this before. He's not come down before, but he has been a backup emergency goaltender, and these people exist and almost never play. It doesn't happen. Extremely rarely does this happen, but he was told, therefore, to suit up, so he had to go in and play. The Blackhawks had a 6-4 lead at the time he came in, and he managed to, I should say a 6-2 lead, he managed to shut out the Winnipeg Jets for the final 14 minutes. And the key for all of this is all of us are stuck here dealing with all these 1040s at this point is we now can feel good that at least one of us wasn't doing 1040s on Thursday night. So basically, there's at least somebody there who wasn't burning the midnight oil doing taxes. Now, one piece of bad news, I guess, from our standpoint for listening to this is from what I can determine, he is not a tax accountant. He's an accountant for an organization in Chicago. So he's not really in the area of having to do all the 1040s, but still, it was something else. So if you're working late this evening, you're listening to it at night, and you've been working late, you can always think that maybe you could have gotten that call up and been sent out there to be in a professional sports game, or maybe not. Next up, we're going to go to a more serious topic. This is the IRS released their data book for fiscal year 2017. This is for the year ended September 30, 2017, and it's their statistics book. And it tells us various things about what's been going on at the IRS. And there was some coverage of this in the tax press, and we're going to mention it. The IRS has the lowest rate of exams since 2003. In fact, as we'll note, there are going to be less than 1 million exams took place in 2017. Taxpayers' chance of being examined is about 0.6%, which is an extremely low examination rate. For those of us in this business, that's not necessarily a good thing. I mean, I'm sure our clients may think it is, but as we're all aware, if nobody's minding the store, uh, people get away with lots of things. And unfortunately, if nobody minds the store, whether you're doing the return properly or whether you're just, doing whatever you can to get the biggest number on there or the lowest number for tax, biggest refund, regardless of whether it might be legal, hey, that also may pass muster as well. Now, one thing this number does not include is all the CP 2000 notices and other items that a lot of our clients would consider to be audits in their view. But these are the actual true things that we understand are audits that would require getting verification for data on the return. They also, not surprisingly, collections were also down substantially in 2017 over the prior year. So these have also seen a significant drop. Levies were down by 32%. Liens were down by 5% over the prior year. There was one, which I think some of us might consider surprising statistic in there, and that is that phone wait times are down. Now, they're not exactly short. They were down to 8.4 minutes from 17.8. Some of us who are a little, shall we say, cynical might just conclude that what's really happened is people stopped calling because it was hopeless. But nevertheless, the IRS was trumpeting how much better they're doing now in handling phone calls, and even that maybe, only 1 out of 4 times do they foul up the answers terribly. That was also one of the stats in the books. I'm not sure if that's also good news, but it's what the IRS is trumpeting. There's a whole bunch of other IRS trivia that you can find if you have nothing better to do. I'm sure you don't right now this time of year. It's an 86-page document that has all kinds of statistics and information. Is kind of useful to look at if after tax season, you want to take a look at some things the IRS has been doing, gives you some ideas of some of the things that the IRS is concentrating on, and that can be somewhat important for us. Next up, the IRS issued a news release, and normally I wouldn't spend a lot of time on this sort of thing, except I think it is very timely because what they're referencing is something they published back in 2014 that I suspect a lot of you just kind of ignored when it came out because at the time it seemed like no big deal. In News Release 2018-71, issued on March 23, 2018, the IRS reminds us about the proper taxation of virtual currencies. They had issued Notice 2014-21 back 4 years ago that discussed this whole issue about how we should tax virtual currencies. I suspect that for many of you, 4 years ago, you had no idea what Bitcoin was or any of the other Monero and all the other things, Bitcoin Clash that we now have. We have all kinds of things that are virtual currencies. So you may very likely have not paid a lot of attention to Notice 2014-21 at the time it came out. This year, though, you probably noticed that we had a Bitcoin boom, of course, now followed by the Bitcoin crash that we're having this year. But the Bitcoin boom, a lot of clients, and I mean, I've run into clients already this year that went out and bought Bitcoin and then sold Bitcoin. And those transactions are taxable transactions. We need to talk about how they go and talk about some of the background. The IRS reminded people in the news release that Bitcoin and the like create taxable income. The fact that they are not, the fact that they may not look like regular transactions doesn't mean they're not taxable. Rather, it means we have income from Bitcoin, and realistically, Bitcoin is treated as an asset. So we'll talk about some of the distinctions there, but that's somewhat important. They also issue a rather, shall we say, not very subtle warning about the consequences of failing to report Bitcoin transactions. They remind us of all the penalties that may apply, interest, penalties, etc., and even openly discuss criminal prosecution for taxpayers who attempt to use Bitcoin to avoid taxes. The nature of Bitcoin is one that basically allows that Bitcoin and virtual currencies, by their nature, they claim to provide, and to some extent do provide, a somewhat more anonymous way of paying for things or being paid. As you might guess, that attracts a certain type of, shall we say, individual who would like to do things off the books. And that sort of off the books transaction, now they may have do so just simply to evade taxes, or they may do so because, by the way, the thing they're selling is illegal. can't be sold. And so it's one of those little problems. You may be selling, drug dealers, etc. Various reasons why you might accept Bitcoin. Now, there are other reasons, totally legitimate reasons for accepting Bitcoin. Now, it hasn't quite worked out the way in 2014 you might have thought it would, because it turns out Bitcoin didn't quite scale as well as they would hope. And so there are real problems with using it as a payment medium generally. In fact, a lot of organizations had to back off that, because now the cost of a transaction works to be somewhere around $30 per transaction, as the number of transactions shot up, as the value of Bitcoin shot up. And the other problem they ran into was, because it fluctuated so wildly in price, it also wasn't very good. Between the time you started buying something on the website and the time you went to pay for it with Bitcoin, the price may change before they run everything through. So it's like, the value of the Bitcoin changes wildly, so you never know how much you're paying with, or if you have enough, or what's going to happen. So for various reasons, it didn't work out quite as well as they thought for payment. But a lot of people have been buying and selling Bitcoin this past year. The IRS views on the taxation of Bitcoin were outlined back in 2014 in Notice 2014-21. At the time, I wrote up an article about Bitcoin that was used in our tax update courses, the Nichols-Patrick tax update courses at the time. And I've reproduced that article in the handout for this week and on our website, so that you can take a look and read over that article that came out back when this thing came out in 2014. Now, in the news release, the IRS reminds us that, various things about Bitcoin. A payment made with virtual currency is subject to information reporting to the same extent as if it's made with any other property. If you pay someone for services in your business with Bitcoin, and you pay them more than $600 for the services, you're supposed to issue the 1099 miscellaneous. The fact it was paid with Bitcoin doesn't mean you don't worry about it. Payments to independent contractors or their service providers are taxable. Self-employment rules will apply. If you receive Bitcoin, that doesn't mean the payment was an income to you, because, oh yeah, I didn't get paid in cash, I got paid in Bitcoin. That doesn't change it. If you pay wages in Bitcoin, haven't seen that tried recently, but apparently some people are. Same old rules, W-2s apply, and withholding applies to that, all those standard issues. And when you get rid of Bitcoin, or you transact in Bitcoin, it's going to be a capital asset. The gain or loss depends upon how long you've held the asset, and if it is a capital asset in your hands. Now, notice 2014-21 went into a couple of other interesting issues. One thing which was true was Bitcoin and the like are treated as property, right? So whenever you exchange them, we have to recognize a gain or loss. They said Bitcoin is not a currency in the sense that the code considers something to be a currency. It is rather an asset. And as we're all aware, it says sale or exchange. So if I give Bitcoin to somebody and they give me back, let's say, a computer, that's a sale or exchange to me of the Bitcoin. I have received a computer. Let's say the computer is worth $1,500, and I gave Bitcoin in exchange for that computer. I'm going to recognize, and because I'm going to assume I gave $1,500 worth of Bitcoin for the computer, I'm going to have to treat that as a sale of the Bitcoin for $1,500 and decide if I have a gain or loss based on my holding. And if that Bitcoin is a capital asset in my hands, which it probably is unless I mined it, then I'm going to have to recognize that as a capital gain or capital loss. That makes Bitcoin very difficult to use as a medium of exchange, largely because it means if you're accepting Bitcoin in your business, you're going to take it in, that's fine. Your basis is what you sold the property for. But when you then go to cash it, then if you don't cash in right away and you later use that Bitcoin, I've got to record a sale. In fact, I have to record a sale if I cash in right away. But obviously, the quicker we cash it in, the less likely that the value has changed in the interim. The other thing to remember about Bitcoin, though, is there is a way it could be an ordinary asset in your hands. The way Bitcoin is generated and other cryptocurrencies are generated, okay, people really think you're kidding if you want to explain this to somebody the first time. It's like, that can't be the way it works. It's no, nobody would pay, if we were up to like $20,000 of Bitcoin, nobody would pay $20,000 for something that was done this way. Well, gang, yes, they would, okay? They would pay $20,000, at least for a while they would. A Bitcoin is generated by having your computer effectively solve a very complicated math problem. Now, part of the reasons you do this is part of how the whole transactions take place on the network. It's part of the computing that allows the thing called the blockchain to be updated and things to be validated. If you want to go through blockchain, it's a whole long discussion about how blockchain works. But let's just accept the fact that your computer does lots of work. Your computer does work, which allows the system to function. And if your computer solves a problem, is the one that finally solves the problem, you're allowed to you be issued back, you create 1 Bitcoin. The system will recognize 1 Bitcoin given to you. And by the way, it's a distributed system. There's no central computer that runs the Bitcoin. Okay, that's going to confuse you too. Don't worry about it, okay? Just don't worry about it. Accept it for right now. When that happens, you're considered the concept of mining. The creation of that Bitcoin and the mining is considered to be a trade or business, assuming you're in the business of doing it. And you almost certainly will be. The reason why these days, it takes an insane amount of processing power. And to get that processing power, it takes an insane amount of electricity to both run the processors and, by the way, to run the air conditioning to keep the processors cool in order to generate the Bitcoin. In fact, in most parts of the country right now, it will cost you more in electric power to generate a Bitcoin than the value of the Bitcoin, especially now the prices drop so dramatically. So the reality is that the Bitcoin is, but you're generating income. What happens is there are people, especially who have gotten access to low-cost electricity, who have set up these banks of machines to mine Bitcoin. If you are mining Bitcoin, that is considered to be ordinary income. And if that's a trade or business, you're doing it in the sense of a trade or business, you meet all the standard requirements for trade or business, then we're also assumed that that's going to be subject to self-employment tax. So you need to be very, very careful there. Understand that's ordinary income. When that person later sells their Bitcoin, that's ordinary income, right? That's basically inventory in their hands. So we end up creating the Bitcoin. That generates ordinary income. Now, the other interesting aside here, one thing we haven't discussed yet, and some of you may have hit, and by the way, we do not have good guidance on this at the moment. There's been requests. In fact, the American Bar Association recently requested, pinned by somebody you might recognize the name, Karen Hawkins, formerly head of OPR, now writing these requests on the part of the American Bar Association, has asked specifically for some sort of safe harbor guidance on this issue. What happened in Bitcoin last year, if you weren't aware, it forked. Now, forking means that we basically split the project into 2 pieces. The reason it was done is because, as I mentioned, Bitcoin itself didn't scale well. And there was a fight internally about whether they should change the mechanism or go to a mechanism that would require a lot bigger data blocks, but would be able to process much faster and process a lot more transactions. So they split into Bitcoin, Bitcoin Cash. You got, at the time of the split, everybody holding a Bitcoin was given effectively the equivalent amount in Bitcoin Cash. Now the question becomes, is that a taxable transaction? The reality is we don't have real good guidance about whether that is taxable or not, and to what extent and how it's taxed. And the bar was asking for the IRS to please issue a notice or some guidance giving some sort of safe harbor treatment, where, for instance, you could treat it in some way, shape, or form to tell us what we're supposed to do about the recognition of the Bitcoin Cash. If you have that situation, there are many ways to look at it, and we're not sure how the service is going to go. Just be very careful there with your client about that. What we're doing is taking the one asset, the old Bitcoin, and splitting it into 2 new different assets. And how that works, I hear a lot of people say, well, it's like a stock split. Well, no, not really. Or it's like this. It's like, well, no, not really. It's, the problem is it's got to be taxed under provisions because the law has no special provision to deal with it. That's a whole nother area. But if you have clients who have dealt in Bitcoin this year, I strongly suggest you go take a look at Notice 2014-21. That is the one that guides. And as I said, you probably back in 14 skipped over this saying that's no big deal. I don't see Bitcoins. My clients don't do those crazy things. Well, this year your client did those crazy things. So, be aware of what you have to worry about with the Bitcoin stuff. Finally, this week, we're going to take a look at the IRS issuing a news release 2018-73, issued on March the 26th of 2018. And the IRS is pushing people to get a payroll checkup. It wants taxpayers to review their withholdings. Okay. And they actually published 3 YouTube videos on the topic that you can find on their site. You link to them. You can watch these YouTube videos. It talks about, and the news release talks heavily about people who should go back and check their withholdings. The problem that we all know is this. With the new tax law, we have some radical changes in how taxation is going to work for a lot of individuals. Lots of things are changing. But what ends up happening was we started this year with effectively most people using their 2017, we talk about withholding allowances. And, if that worked for 17, they just rolled it into 18. And when the new tables came out, we just started using that same set of allowances. In some cases, that's not going to be a problem. But in other cases, the radical changes in the law means that you really, clients need to go back and take a look at reconsidering what their withholding number should be. The IRS on this news release is pushing people heavily, of course, to go to the IRS withholding calculator. And they're saying clearly groups that should rerun their W-2, their W-4 information is any 2-income families. Well, that's virtually, that's the vast majority of married couples in the U.S. So they need to retake a look at it. Anybody using 2 or more jobs or only work for part of the year, we all know that's a problem. These are things that we know the W-4 just isn't based on doing. If you have people with children who claim child tax credit, okay, that's most. People with older dependents who are 17 or older, because remember, we changed the law. Now there's no exemptions anymore. And while the child tax credit increased for those up through 16, from 17 on, our credit goes only $500, which is probably going to be much less valuable for most of these taxpayers than the old exemption. So that's a problem. If you itemized in 2017 because the state and local taxes are being capped at 10 grand and we're losing all the miscellaneous itemized deductions. So all of those things do. We also have now the higher standard deduction. So you're juggling those things. People with high incomes and more complex tax returns, we'll come back to that in a second. And people with large tax refunds or large tax bills, well, that's normally you suggest somebody should take a look at their withholdings. Now, all of this is good, but let's be honest, for a lot of our clients, they're going to fall in that category of high income and more complex tax returns, where the IRS withholding calculator is simply not going to be sufficient to handle their situations. What you probably need to realize is, to keep your clients from having surprises next April, it may not be a bad idea to consider reaching out to clients, obviously after tax season, but reaching out to clients and saying, you may want to reconsider how much you're having withheld and take a look at it under the new law. We can assist you in helping you to determine what it looks like your taxes will be for this year, and then help you determine if maybe your withholdings are in line. Obviously, this will be a chargeable service because that work can't be done for nothing. But you should probably warn clients that if they don't do that sort of work, that don't be surprised if come next April 15th, you either have a huge refund. Okay, I know for most American public, that's like no big deal, wonderful. Or you might end up owing a lot of tax because your withholdings may have been adjusted down when in fact your tax didn't go down. Or you may be part of that about 5% who are going to see a significant increase in their taxes, but your withholdings may have gone the other direction. So all of these are things they need to be considering working on. So certainly this is an outreach program for your clients after April 15th, or I should say 17th this year. Eventually we'll get back to April 15th as a filing date. Again, reminding your state societies are going to be bringing out their catalogs now. Many of them have already posted catalogs online, but I doubt you're going to have time to go peruse them now. But take a look at that. There are going to be courses coming up. I know that I have some courses that are going to come up in May on the qualified business income deduction and Tax Cuts and Jobs Act issues otherwise in various locations. So basically, you may want to be looking for that early in tax season to try to help you with that planning of getting them to get their withholdings and everything straight. But take a look. Your state society courses catalogs should be out, as we say, normally right after the 15th. They'll all be live and you'll be able to sign up for this year. This has been the current federal tax developments for the week of April the 2nd, 2018. As I say, during the week, though probably not a whole lot this time of year, because I don't know about you, but I'm pretty busy. And so I'd have to find time to write all this stuff. But we will post updates as we get a chance on our website, currentfederaltaxdevelopments.com. If you have any questions or comments, you can send them to me, edzollers@currentfederaltaxdevelopments.com. I'll check my email there. I'm on Twitter. I'm at Ed Zollers. I post articles there. I also posted today, just today, posted a link to a Georgia article. Georgia, by the way, has enacted a bill. It's gone to the governor. We'll see if the governor signs it. That is going to put Georgia in the Colorado camp to have a tattletale use tax law. So if your client's selling into Georgia, you may want to take a look at that. You can follow me on Twitter. I'll tweet things like that that may not be worth a full write-up, but are worth knowing. And also follow some discussions on the subreddit on Reddit I've mentioned, reddit.com/r/taxpros. I do pay attention there. I post some things there. And if you have some questions that you want to have a little more discussion on, you may want to post them there. Well, as we say, we're starting into April. It's now tax crunch time for the beginning before the first extension. So make sure you're getting your rest. Take care. And we'll see you back here next week with more current federal tax developments.